Hello, I'm Sam Meredith, and today, in light of the data released concerning Poland this afternoon, we're taking a closer look at their economy by talking to emerging markets research analyst from Forecast, Anisha Arora. So Anisha, data out today shows Polish industrial production has increased by 2.3% in comparison to April last year. As a leading indicator, how does this reflect the overall economic health of the country?
The overall health of Poland's economy is improving. We've had quite a good set of local data over the past quarter, and that was reflected in the Q1 GDP preliminary reading, which came out at 3.5%, which is actually above the consensus forecast for 3.3% year on year. However, as you said, industrial production today increased 2.3%, and that was actually below consensus, which was surprising, given last month it was quite a bit above consensus, and it was quite robust at 8.8% year on year. I think although this figure is a disappointment, industrial output into the latter half of 2015 is seen picking up and will be reflected in GDP figures later this year. I think in terms of forward-looking indicators, manufacturing PMI has increased recently. We've seen pickups in new orders and backlogs of work, which is also a pretty good forward-looking indicator. We've seen PMI index as well kind of holding expansion for the last 7 consecutive months. So again, this is quite a good indicator for the Polish industrial side of the economy. I think also net exports haven't been improving recently. They've recently returned to positive values, and we've had falls in the unemployment rate in comparison to levels in 2014. These have prompted quite optimistic comments from NBC members from the National Bank of Poland. And on the whole, the consensus seems to be that growth may be faster than current projections for 3.4% year on year in 2015. So I think on the whole, it's quite a good outlook for the Polish economy.
In spite of this positive data, both retail sales and producer prices came in below zero at minus 1.5% and minus 2.6% respectively. Should this be a cause for concern for the Polish economy, and how do you assess their performance in comparison to similar economies in Europe?
I think the overall outlook for inflation throughout Europe and Central Eastern Europe has been pretty subdued. I think, however, the bottom of deflation has been seen. For example, in Poland, CPI headline has lifted off the lows of 1.6% minus figure in February. And I think for now, broadly, there is still quite a clear lack of demand-side pressures throughout Europe. However, I think, the way that currencies in Eastern Europe are heading, they're all slightly biased to the weaker side, and our in-house forecasts see higher levels for Euro Zloty, Euro Forint this year, and these will eventually contribute to increases in producer price inflation and consumer price inflation. So I think from that perspective, there isn't really much to worry about at the moment. Of course, it would be nice if inflation was slightly higher than it is, but for Poland specifically, the fact that we've kind of seen a bottom in both PPI and CPI figures supports the MPP's stance that the easing cycle is over. They're going to be holding monetary policy stable for a while now, kind of let growth balance out with inflation.
Lastly for today, which key indicators will you be looking out for in the short term? Are there any potential surprises for us to keep our eyes on?
I think, of course, looking at the manufacturing sector in Poland is going to be quite important, but politics may also be a source of volatility this year. A poll actually released this morning ahead of the runoff election, which is scheduled for the 24th of May, has shown that backing for the current president, Komorowski, and opposition candidate Duda are almost neck and neck. I think regardless of what the outcome is on the 24th of May, the implications for Polish politics are going to be slightly bigger than was expected at the beginning of the year. I think the ruling Civic platform right now and their 8-year rule is going to be under pressure, and this is going to be in sharper focus ahead of the parliamentary election due in the autumn. As a result, I think we can expect some greater volatility in Polish assets, and particularly the zloty this year. So those kind of factors will be good to watch. Also, the tightening of monetary policy in the US will be quite key. There's a lot of debate about the timing of when they will start to lift interest rates. Again, this will be quite a big factor for capital flowing in and out of Poland. Should they decide to hike rates kind of in Q3, we could see more pressure on Polish assets and more pressure on the zloty. But I think these eventually could be positive outcomes for the Polish economy in terms of a weaker zloty, for their exports and for their trade, and also for the current account balance.
Thank you, Anisha. Check back with Dukascopy for more updates throughout the week. Goodbye for now.